We heard the bank earnings. Everybody was very happy about the earnings reports last week, but I think that there's a little bit more trepidation about what we may hear this week, perhaps in the earnings reports themselves, perhaps on the calls when we get some color around what the future looks like when it comes to supply chains, cost of energy, and labor.
Right, right. I think that the main thing that investors will be listening for is the impact of inflation. And as we look across the board, companies, of all sizes and across sectors really are talking about it quite a bit. So in terms of input costs, obviously input costs are rising. And as inflation expectations go up, that means that people will seek to have higher prices going forward. And that's where you have that ripple effect. I do think that over time, as we make our way through the COVID pandemic, which you were just describing, some of this will resolve. It will take some time, but it will resolve. But the wage inflation, I think, will persist. I mean, I think we've had a major mismatch in supply and demand, and I think the wages will continue to be elevated, which is not necessarily a bad thing, depending on how companies manage it.
So, Valerie, if you're right, how are you advising clients to position themselves amidst all of this?
We are focused on consumer discretionary stocks. We're currently underweight energy, actually. We have good exposure to consumer staples as well.
Go back to energy for a second. Why underweight on energy given the rise in price, for example, of WTI right now?
I know WTI is up. I manage a portfolio that really focuses on responsible investing in ESG. And quite honestly, the energy companies, it's hard to find a place for them in a portfolio like this. And we seek to have exposure in other ways to the characteristics that energy companies typically provide. The other thing with the energy companies is I think it's very difficult to forecast the long-term cash flows of these companies, given the likelihood of various regulatory action and shifts in demand in their various end markets. So I think there's more risk there than perhaps people are considering.
Do you worry, by the way, this is a policy question, it has nothing to do with the investment case in some ways, but do you worry at all that the lack of investment or the positions that a lot of investors increasingly are taking around ESG mean that there's less just investment in that space? And we're hearing stories now, as you know, about the reason why the cost of energy is going up, because we may not have enough supply.
Right. I think that, you can invest, I think, in some of the energy companies, but really if you have a focus on those that are really pivoting towards an energy transition, so to speak, right? Because again, coming back to the long-term, cash flows of these companies, you want them to be fit for the future. And that's what we've seen with many of them. And in fact, they've announced that they are seeking ways to reduce their emissions. So I think there are ways to maintain some exposure, just that we don't have any currently. We're underweight, and we have been for some time.
And then finally, I interrupted you, so not politely, in the middle of talking about energy, but you were about to tell us about 2 or 3 other themes in terms of how you've positioned the portfolio.
Right. So one other issue that we focus on is labor management and human capital management practices, because as I said, we're seeing essentially a war for talent really at all levels. So there are companies that are addressing this in some pretty innovative ways. I mean, we have Walmart as an example in the portfolio, which historically really had a bad reputation as it related to labor. But if you look at what they're doing now, their wages have actually increased. But in addition to that, they have a program that enrolls 300,000 people in college education and college access. And so the actual employee mobility is really improving. And we actually measure the employees' perception of Walmart as an employer of choice, and it has actually improved materially. So we're looking for companies that are going to be able to attract the labor that they need, right, as we're in this very tight labor market.